Going on YouTube Nation, this is Darth Dividend. Welcome to my Fundrise Friday. If you guys are new to my channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm just going to give you an update in my Fundrise portfolio. They just made a new acquisition to a DC area core stabilized commercial property. So they said that we are particularly attracted to the risk protection available from operating the property as is near term with the option to redevelop it and build up to 3 million square feet in the future. So they just got this 250,000 square foot property, which is a 2-story Class B office, a retail strip center, and a flex industrial warehouse. We plan to operate the property as is the foreseeable future while determining the appropriate time to begin entitling the property for future development. So here's just an idea that they have. Okay. And so there's some big property in Virginia outside of DC. Okay. So they discuss their business plan and their model that they have at over 13 acres. It's one of the largest developmental sites under the newly adopted master plan, as is well positioned to benefit from the area's growing density and specifically Amazon's HQ2 as tenants seeking more affordable space continue to push south and west from National Landing and Old Town Alexandria. So they again are comparing the virus, okay, to the investment. They said although the property is historically maintain a high occupancy rate and strong cash flow, we expect that over the next few months, so as long as Virginia is under the shelter in place under non-essential restaurants and realtors required to close, cash flow at the property will be reduced as many tenants are unable to pay rent. We intend to work with any such tenants on an individual basis to determine if any rent relief is applicable, as well as put in place the payment plans to ensure that those tenants are able to return normal business operations while still fulfilling the lease obligations over time. So they did their stress analysis and they basically said what the rationale why they invested. So they said it's a stable local economy. They said basically it's right by, Amazon's headquarters, blah, blah, blah. Attractive finding. The acquisition was financed with a 5-year, 2.21 fixed rate interest only loan, which will be priced near the bottom of the interest rate environment, positioning it to weather an extended economic downturn. So then they just discussed about some issues about it. So it is on the growth E-rate. So let's see how my growth E-rate, this is what they project an annual return. It's not guaranteed, it's projected. Okay. So it's part of the equity. Let's see what the details say. Okay, this is what they explained. So this is part of the B, risk rating B, structure, equity, total commitment. That's a buttload of money. Market analysis, Washington, D.C. and its suburbs in Maryland and Northern Virginia form a fast-growing and dynamic market that's uniquely isolated from national economic downturns by the federal government. Capital stack, Fundrise, okay, debt, Citizens Bank. Okay, it's not too bad. So they have a projected timeline. Basically, they updated us on the 21st. So let's go back there. And which one is this? Growth E-rate 5. How was growth E-rate 5 doing? So this is the one I'm at 0.6%. Estimated value $70.97. So, they're really scattering this portfolio. If you look at my previous portfolios, they're really scattering it and getting it more diversified and cutting things apart here and there. So, that's not too bad. I mean, that's the compound interest is going to kick in. But these bad boys, once they start kicking in, that's what I'm excited about. As I discussed in my previous video. Growth E-rate. So, I mean, they're making progress and stuff, even though I like their risk analysis that they have pretty much and their tests that they do to make sure it's somewhat safe and stable in a rough time. I think it's okay. I mean, I'm not going to complain. I'll just go to my overview. This is what I like to see real quick on my returns. So every time I log in, I pretty much know that I'm making money. So that's the nice thing. So I'm in auto invest. I mean, here's basically August 2nd. And I went all the way up here, close to 12,000. So, I mean, that's not too bad. The dividends will start kicking in. Appreciation will kick in. So, I mean, it's not too bad. I can see appreciation going down just because of what's going on. So the returns aren't so bad. I mean, $1,388 I've made so far from Fundrise. And 2019 is really when I put money in and just was like, okay, let's see what's going on. So it's still hard to say. Again, I have $10,000 in these guys, so I mean, I don't see any need right now or any sense of urgency to put money in them because I have my dividend portfolio, but these guys are doing their job. I mean, once I get to 100,000, I mean, that's not bad at all. Each day, things increase. It's a 5-year, 10-year plan. Who knows what I'll do in 10 years with Fundrise? Maybe just flip it and take the dividends or go from there. So it's just, over time, it's gonna fix itself. These guys are pretty sharp. I mean, they don't play around when it comes to screwing around with your money and going from there. Let's see what the growth E rate is. It ramping up, like they said. Nothing yet, but I mean, this is ramping up, so it is the initial phase of the E-rate or E-fund that's focused primarily on raising capital and acquiring projects. Lower returns are expected during this early period as identifying properties, executing value add-on plans, except construction, leasing. So, I mean, these guys are going to take time. This is when I'm ready to start seeing things rack up. These are just my rates that are doing well, but I'm waiting for my E-funds, see how they're doing. So let's again look at how much money I have in them. I mean, I have a decent amount in the Los Angeles E-fund and the National E-fund. I don't know yet if I mean, I like the balanced portfolio. I mean, if things start blowing up on the E-funds, I might just switch everything, but why do that when I'm doing so well on my portfolio and things are going, the projects are blowing up. I mean, I'm pretty tired. I worked like 2 extra hours. I mean, I don't know why, but I was up at like 4 a.m. I was looking at stocks and I couldn't go back to sleep. So I worked, 7A to 7P. So it's like, ugh. And I had to stay extra to chart, and it's like, oh, so I'm drained. But I did promise you guys I would do a video. So the performance, again, on this, the year-to-date returns, I'm just excited to see how things go from there. Again, these bad boys aren't even ready. Some of these are just ramping up. So we'll see what happens with this. And, I feel very positive and I feel very confident. I see a lot of these research studies and stuff are discussing people that were affected by the bug, and that people still have opportunities to get better and herd immunity with a big research project that they did in Stanford University and USC, where people who are not even infected, they just checked them out to see if they had the virus or not. And people did prove some that they had the antibodies, so that's pretty promising. And hopefully over time things will get better and go from there. So that's pretty much my update on Fundrise Friday. And this is I know somebody asked me about Fundrise versus Vanguard VNQ, which is a really good real estate investment trust, exchange traded fund that Vanguard owns. So that'll probably be my next video that I discuss. I may do it tomorrow, or I might try to squeeze it in on Friday next week. But Vanguard VNQ. First of all, Vanguard VNQ. These guys at Fundrise try to compare themselves to it, and this is a pretty diverse portfolio as well as Vanguard VNQ. So I will give you my thoughts on that in my next video. So if you guys are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I talk about the acquisitions in my balanced portfolio, what I'm excited about with my Fundrise account, how much money I'm generating, because you're probably curious to see what goes on with Fundrise and if it's really worth it. If you are considering it, I do have an affiliate link in my description below if you want to sign up at Fundrise. So that's one thing if you're considering that. So everybody always asks me, oh, what do you think? What do you think? I always get emails. Oh, what are you doing? Well, what do you think of this? Well, this is why I post videos, because I'm excited. I have a very balanced portfolio with private rates and public rates, and I did put some money in the public rates. They are taking a hit, but they're going to fix themselves over time. Everybody talked about how they were so stable during the recession and this and that, but they took a hit. I mean, don't get me wrong. Everything took a hit, financial and everything, but I see these guys, Fundrise, and a lot of the really strong real estate investment trusts, I see them coming back strong and with an iron fist eventually. So I'm hoping that more people are healthy after they were exposed to the bug. And I hope people have proof that, that they have the antibodies to fight off this nasty bug. I mean, it is tough. I mean, I'll give you my honest opinion. I think we've been exposed to this a long time ago, and I wouldn't jump the gun on comparing, this issue or this pandemic to 1918, because in 1918, people just mostly travel on boats, and now people travel on planes and very fast trains and subways and cars. So, there's a lot of potential of this being really hit hard, in the winter. I hope I'm right, but I think we've been very exposed to this in the winter before the quarantine started, and I'm ready to start hitting the gym. I know you guys are ready to get back on your feet, but this is why, I invest and I'm diversified, because if one sector takes a hit, then you got to have the other sectors, back it up or be strong. So, but thank you again for watching this video, and you guys have a good one.